There is a dramatic pull happening from the west and from the east, and they are converging, and that's what we're going to talk about today. Hello everyone, and welcome. I'm Eric with Summit Metals, and welcome to your Monday Metals Market Update for December 8th, 2025. Today, we're going to talk about two very important things that are happening, in addition to reviewing the charts and taking a look at what's happening in precious metals and other markets today. All right, let's jump in on the charts. Right now, we're looking at gold. And as you can see, gold remains, its 20-day moving average remains above its 50 since way back in the summer, and that continues to just power forward. That is an incredibly powerful sign for us that love gold and our precious metals. And here's what's great, silver is even looking better. Let's take a look at silver. So silver right now is absolutely exploding. It's sitting right now at over 50, right around $58 an ounce. But look at the uptrend. Since way back in June, it hasn't even gotten close. In fact, it's accelerating away from its 50-day moving average. This too is a very powerful sign for those of us that stack silver. Sometimes we don't talk about it a lot, but let's cover platinum real quick. And you can see platinum's a little bit different. Platinum sitting here around $16.75 an ounce is right now at that point where the 20-day is possibly just about to cross the 50. That's a clear sign of accumulation there. But we need to see which way this is going to go. Is it going to break to the upside and accelerate forward, or is it going to continue to accumulate and drop to the downside? That to me is a wait and see. All right, now let's take a look now at the gold to silver ratio, because this has absolutely changed and it remains very positive for silver. You can see back in June we had this cross where the 20 went below the 50. And as we look all the way out now to the beginning of December, it's gapping even farther down. So, a lot of people, we stack gold, particularly people my age and older, let's say, because we know gold is a standard by which we can keep our wealth safe. Silver, a bit more speculative, but at this time, when you see it showing these signs, indicates that for those seeking volatility, for those seeking greater gain, right now the balance is shifted towards silver. And this I don't see abating. It looks very, very strong to me going forward. One of the drivers of that is, of course, the dollar. We know the dollar was sitting way up around 104, 105 back in the summer. It's right now around that $99 mark. And it remains under pressure. You can see it's crossed below its 200-day moving average. And if we can get that 20 to cross below the 50-day, I think we're going to see an acceleration to the downside of the dollar, which of course is very positive for our gold and silver holdings. Now, another driver that I don't think gets talked about enough is oil. When people are manufacturing, the miners and things like that, oil is one of their primary expenses for all that huge, heavy equipment it takes to mine gold and silver. And as you can see, back in August, we had a crossover here, and oil continues to the downside. That too is very, very positive for our gold and silver. Now, I also believe that an investment in oil right now represents a bit of a hedge. I personally have a small oil holding as a hedge to my precious metals because I don't think it's going to stay down forever, and I do think it's a major component, so it operates as a kind of a nice balance or hedge between that and my precious metals holdings. A lot of times we don't talk about the stock market in general, but look how the stock market has just been on an absolute tear, with the S&P 500 now over 6,800. But look at the 20-day with the 50-day. That right there, you can see it kind of accumulating right here around this point in time. If this breaks and starts to power down, I think we'll see an initial hit to our gold and silver, it being a reliable asset that's maintained its value. But I think after that, we're likely to see a very strong accumulation and then acceleration into gold and silver. All right, let's take now a look at some of the economic things we talk about. If we look right now at the SOFR, again, the pressure that we feel here is continuing. And that is something we're going to talk about as we continue with the presentation today, because the pressure on the Federal Reserve is continuing. If we look at our M2 money supply, if we come in now and we zoom in on what's happening, again, you can see we're continuing to ratchet up, continuing to print money. That is inflationary. Although we have jobs issues, this inflationary pressure is something that we will benefit from in our gold and silver holdings. All right, now the question is, of course, is the Fed going to cut rates coming up here in just a few days? And you can see right now the probability is at about 90%. And I too believe they're going to do it. The question is how much. Most are predicting a quarter point, and I would agree with that myself. All right, now let's take a look at what's happening with the consumer price index. Let's zoom in on here. And again, a confirmation, things are getting more expensive. Inflation is happening. So imagine the Fed, they're in a total catch-22. What do? Jobless rates are increasing. And so there is an enormous pressure on them to try to stimulate the economy, but they're having to do it in a market that is showing signs of inflation. So they have a tough choice, but they always, when debt's high, raising interest rates makes our expenses go up, makes us harder to service our debt. When all those things are happening, what do? They cut rates. And I think that is going to continue, and we're going to talk about that in detail as we continue in the presentation today. So let's go now to one of my favorites again, the U.S. debt clock. Again, our budget deficit is accelerating, now almost at $38.5 trillion. And if we look here now, you can see where we crossed this a few weeks back into 121, our debt to GDP ratio. Now it's well over 121.62 over 21.5, meaning that too is continuing to accelerate. So there are crazy things happening right now with our debt. And even though if you look down here, you can see that our inflation number, our U.S. trade deficit, is actually starting to go down. It makes me question, are tariffs working? Are we actually starting to collect more money to get more trade coming in than what's going out, which would be a change from what we've had in the past? And in particular, if we slide over, you can see against China that number too is dropping. I actually think that's very positive for America and a very, very good thing. All right, now shift now into what's happening in this market and what we can do about it. All right, so we talked about gold and silver. Silver at 58, gold at 41.88 right now. I guess the question is this a silver squeeze, or is this just pressure in the market? I'm going to argue that it's just pressure in the market. We know right now we're running a deficit of over 1 billion ounces of silver over, say, the last 7 years. But here's what hasn't happened. We haven't seen like a dramatic increase, like a massive acceleration. That to me is the definition of a squeeze. And I think that still is in front of us and something very, very positive for us who own silver. We also know the Fed is in the process right now of halting its quantitative easing. That is very positive for gold, because as they print money, as they put more money into the system, that in itself is going to drive the price of our precious metals higher. Also, we're going to talk about what BRICS is doing with something specifically called the unit. But before we do, let's talk again a little bit more about the gold to silver ratio. Now we know right now it's sitting at about 72, and as we talked earlier, it was over 100 before. But where's the point where we start to say, okay, right now there's a bias towards silver. It totally makes sense if you're kind of an equal mind between gold and silver. My opinion right now is you should be buying more silver if that's you. But where do you find the balance in that? For me, historically, we know it was way back to 30 to 1 or even 15 to 1 if we go back historically. But I think right now in today's market, the number we should be keying on sits right there around that 60 to 1 ratio. And so we still have a long way to go, which means it makes very good sense right now to be an accumulation of silver versus gold, although I think both metals serve unique purposes and are also very positive in this market. All right, let's talk now specifically about what the Fed's doing with ending QT. The Fed has stopped draining liquidity out of the market. We talked about the SOFR rate and the pressure they're feeling there. That is part of what's driving this. This balance sheet expansion, instead of massive stimulus, is something that is significant. And gold continues to consolidate. It's in a clear accumulation phase, which is very positive for us. So let's remember, the Fed right now is locked in a cycle of perpetual debt monetization. They have to print money to cover the debt and to try to account for the jobless rates increasing as we sit here today. So I believe very strongly that gold accumulated at $4,100 an ounce is just the base of what we're looking for as we move forward. Now, let's shift a little bit to what we learned this last week about BRICS and something called the unit. The unit launched as what they called a pumpkin batch testing on October 31st. It was comprised 40% of gold and 60% of these 5 BRICS currencies. The fact that they put gold in there means that these other countries must own, not paper, but physical gold on their balance sheet so that they can trade. Now, it's important to understand this is not a consumer product at this point. This is a way where countries can trade in the BRICS consortium between themselves by doing what? Avoiding the US dollar. So this creates, in my opinion, a permanent floor that we can benefit on gold, which of course will be very beneficial for silver as we move forward. As we know, we've got these 2 strategic implications that are happening right now. On the West, we've got our dollar debasing. We have our strong need to print money, to pay our debt, to do these things. That's very positive for gold. And then on the East, we have this whole remonetization taking place, right? With things like the unit and with what BRICS doing, what you see in India and China and these other countries where they're continuing to accumulate gold. This eliminates their counterparty risk. And what it does for us is it means we too can be like bankers and we can eliminate ours by going long gold and silver in our own accounts, in our own homes, or with our own private vaults. As a strategy for us as stackers, these structural deficits are here to stay. This gradual print pretty much guarantees the fact we're going to see the dollar decline. It's amazing right now that it's kind of treading water, but as I showed in the other chart, that continues to be a difficult position for them to hold, and I don't think they will. We know the gold to silver ratio is sitting there at 72. It's got lots of room to come down, which makes silver a very good place, I believe, relative to gold even, for those that are seeking more volatility and more profit in their metals positions. But here's the key: stay disciplined. Use things like auto invest at Summit Metals and just continue plowing forward, knowing that you're making sound financial decisions as it being part of your diversified portfolio. So in summary, the floor is rising. We have silver tightness, we have Fed liquidity, and now we have BRICS with the unit, and it's all just starting. We are at a great position right now in our precious metals, and I believe the future is very, very bright for us. All right, so thank you so much for joining this week. Please join the discussion, like, comment, and subscribe. We really do read your comments. We appreciate it, and I encourage all of you to read the comments. You'll learn so much from the incredibly intelligent people that are commenting on these videos, and we'll look forward to seeing you next week. Happy stacking. I'm Eric with Summit Metals. We'll talk to you next week. Thank you.